Greetings, everyone. We are going to review the Robinhood portfolio here. Right now, the portfolio is up 1%, $239 gain. Today has been a really good day for the portfolio. Actually, the entire week. We're just going to click on the weekly gains right quick. We can see that the portfolio is up 4% and $1,015. And for the past month, I'm only up $82. So we can see quite a bit of volatility towards the end of May. You guys can see that my portfolio doing all the way down, and I have since recovered those gains. So we're going to quickly talk about what the portfolio has been up to. We can quickly see at the bottom there, PFE paid a dividend of 36 cents per share. You were credited $18. So pretty good to see there. I don't have to do anything and get paid dividends. You guys know that I love dividends and I love compound investing. Not much news going on in the market. There was a jobs data that just came out, and the Fed basically said that if the job reports were weaker than expected, then they're going to probably not raise interest rates or something like that. And if the interest rates don't go up, then a lot of people can borrow more money. So I think that contributed to the markets going up. But the trade wars have sort of calmed down a little bit. The market has turned bullish once again, and the sell in May and go away strategies seem to be going away, essentially speaking. But let's quickly dive into the portfolio, guys. Try to make this a short video. Apple 190. In my last video, Apple was all the way down to like $173. Right now, there's quite a bit of sell-off towards the end of trading. Excuse me, I said almost day trading, but towards the end of trading, the stocks are starting to trend back just a little bit. Right now, Apple's sitting at $190. Shares 10, average cost 179, total return up 5%. So Apple is starting to trend back up here, up $102. Not much to say about them. You guys already know I love Apple a lot. Giant company, almost they were $1 trillion market cap, but that has since gone away. Dividend yield not high, but this is probably the only technology stock that I have complete faith in adding more shares to. So I have thought about buying Amazon, but at those levels, it's pretty pricey to buy Amazon at that $2,000 range. If it can get back down to about $1,500, I can see myself establishing a position with Amazon. So let's take a look at 3M here, 166.61, 10 shares, average cost 165. I'm up $11 on 3M, Dividend Aristocrat, Dividend King, dividend yield. My dividend yield when I bought it was at least 3.5. So really good to see there to get a company on a 3.5 yield, a company like 3M that has tons and tons of products with their company. I think they have some 10,000 products associated with 3M. But diversified industrials, I like this company at this current price. Right now, it's still down for the year 18%. So thanks to a couple of a couple of earnings reports that have not been very good for 3M and the trading war. 3M is now on sale, and I'm scooping up some more shares. I would like to scoop up some more shares of 3M. Johnson & Johnson 138 today was pretty good. The whole market was up today. Average cost 139, still quite a bit high with Johnson & Johnson. I think it got all the way down to $130, and I could have bought more there. But you guys saw in the last video in my notes that I'm trying to buy Johnson & Johnson around that $120, $125 mark. So not a good time to buy, not yet at least. I'm still honing it out here, and my portfolio diversity is just 6% or so. Equity $1,385. Johnson & Johnson, another one of those solid blue chip companies that pay pretty good dividend, that's been paying their dividends for 50 years. The past 50 years, or as long as back as I can remember, they've been paying this dividend. And there's a lot of news with the company. Unfortunately, there's a lot of stuff about the italic powder cases coming back, but this company's been around for a long time, and I will buy some more shares on the dip. So Pfizer 42.92. Shares 50, average cost $39 or so. And you guys saw at the opening of the video, I did get paid a dividend with them. 50 shares for $18. Really good to see there. Pfizer's still, I wouldn't buy here, but I've been hearing a lot of news that this company could probably have some growth, some unexpected growth to around $46 or so. So, I'm definitely buying into the high 30s here, and I think that's still a pretty good place to start a position with Pfizer. But it's another one of those blue chip companies. This is actually a pharmaceutical company, and I just wanted to lock down the healthcare industry because for some reason I've seemed to be I've been quite bullish on the healthcare sector. I don't know why I've been bullish, so much bullish on the healthcare sector. And everybody knows I love technology, but healthcare is another good sector that I like to be in. And right now I'm pretty big on Pfizer, 151 for 7% return. Pretty good company to see there. AT&T 32.48. My shares are 50. Definitely missed the opportunity to buy AT&T. You guys already know from the last video. I'm trying to start a giant cash position, and you guys can see that $355. So, I'm trying to get that cash position up to around $2,000 or so. But AT&T, another one of those blue chip companies, on the whole portfolio is just solid blue chip companies that pay pretty high dividends. AT&T is sitting around 5-6% yield, and I like the company. It's one of my favorite companies that I have a service provider for. Actually, if you guys look on top of the screen there, you guys see AT&T. I am using them as my provider, and I like the company a lot. So let's take a look at Altria, $51.38. Starting to come back here a little bit. Average cost $53 or so. May have bought into the high here, but I still like Altria. Altria has my complete trust right now for some reason. I remember back in the day when this stock, when I would have at least seen this stock around minus $250, I probably would have let it go. But I'm still holding strong here, guys. Portfolio diversity a little bit high, but this is going to pay a $40 dividend. I like what Altria is doing. I like how they're diversifying out of the cigarettes and into vaping, all kinds of stuff. Altria is a good company. I highly believe in them, and I think these are pretty solid buys at these levels. So. Let's take a look at Vanguard Total Stock Market ETF 146.79. Pretty good day for them. Right now, this past week is almost a 5%. So Vanguard Total Stock Market ETF, after the dip, has really regained all those gains from from last week. Total return $1,255. I'm up 20% again with this ETF, and this ETF will pay a dividend. I don't know if it's going to be $38 like the last time. Let's take a look at the paid dividends for the last time I actually got paid for Vanguard Total Stock Market ETF. March 28th, 2019, paid amount share price 77 cents, so $38.60. You can't complain with that. This is a buy and hold forever ETF. Pretty good ETF. I know a lot of people like ticker symbol VOO. A lot of people like the other Vanguard ETFs, the dividend appreciation, high dividend yielding ETF. Just a lot of ETFs right now in the market. I think a good way to diversify your portfolio is not to go crazy with these ETFs because they have very high expense ratios, but to pick the best ETFs on the market that pay really low fees and some of these ETFs even pay monthly dividends, like I'm quickly going to talk about here. That's PowerShares S&P 500 High Dividend ETF. Very, very popular ETF, especially with the trading community, the ETF community. The whole YouTube community that seems to like this ETF because it pays monthly, very low volatility, and it tracks all the stocks in the S&P 500 that have been paying their dividends for quite a while, and they are very low volatile. So 100 shares, average cost $38.58. It did not get down to $38, $2.89. I remember I was up $400 with this ETF, but if you guys, factor in all the dividends I've been getting with this ETF, $15 here, $14 there, I'm definitely more up on SPHD than what is being indicated with the total return. So SPHD, very, very solid ETF, not quite as high expense ratio, 0.30 percent expense ratio, but very, very good ETF. I really like this ETF. Is putting in pretty good work as far as that goes. But investing $23,133. That's actually going to be it for the portfolio. I only have 8 stocks in this portfolio. You guys see nothing has been sold in the portfolio. I held out that dip, and right now the markets are going back up. It seems like selling May and go away is starting to actually go away, and now we're in June, and a lot of people are starting to buy back into these companies. So Take a look at my notes right here. Stock notes, potential ads for Robinhood Waste Management is a stock that I'm really looking at right now because I just like its defensive utilities. Defensive versus bears. It has a necessity niche. We always have a need for garbage, throwing away the garbage, and we got to put it somewhere. And we need to manage this garbage, and waste management is there to do that. Dividend increases have been really good with waste management, but excuse me, it also has a decent dividend payout. So, I think it pays around 50 cents or so, which is really good for a stock like Waste Management because it's sort of becoming like a blue chip staple in the market. I'm not really sure what sector Waste Management is. I want to say it's a utility stock, but it can actually be seen as a mini sector stock since it does so many things. I actually wrote out the cons for waste management buying at these levels. Trades at a 25 times price ratio, which to me indicates that it's overpriced. Right now, I think waste management is up, I think around $113. So, turning out over a 25 times earnings, it is pretty overpriced right now. Very low yield compared to some of these other companies like 3M that's on sale. There's a lot of debt concerns with not 3M, but there's a lot of debt concerns with waste management, and recycling costs for waste management is quite high. So we don't know how that's going to factor out. Entry position, I am definitely looking forward to buying or starting a position at $95 or lower with waste management. Let's take a look at Home Depot. There's another stock I've been eyeing in the portfolio. Excellent management, great metrics versus Lowe's. It has a lower PE ratio than Lowe's. Great dividend, better dividend than Lowe's. Hurricane sales will always look good with a company like this. It's a retail stock that I really needed in my portfolio because I do love this all the retail stocks. I love Costco, I love Home Depot, and all this sort of stuff, but they're kind of pricey right now. So I'm waiting to buy on a dip, and this might be Amazon proof. I'm not 100% sure if it is, but I would like to think that it is. Cons, expensive, like I said, very very pricey stock. It's almost $200. Housing market outlook concerns. We don't know how that's going to do these next couple of years with a looming recession. About to hit versus Lowe's valuation. I would say that's the only thing that Lowe's has over Home Depot in terms of its valuation. Lowe's has is very very low valuation at $93 or so compared to Home Depot, which is almost $200. So, and then Lowe's is a dividend aristocrat over Home Depot. So, entry position, I am looking to add Home Depot shares into the portfolio, 170 or lower if it ever gets to those prices. And finally, the last stock in the portfolio, at least in my notes that I have written down, is Bank of America. Its pros is a company with friendly PE price to earning. I'm losing my words here. Friendly PE levels 9% or so. It's very cheap, core staple bank, and interest rates. If interest rates continue to increase, that actually just means more profits for the bank. The cons are a looming financial crisis. We saw in 2008 that Bank of America fell from $50 all the way down to $6, guys. Absolutely incredible. Can you imagine buying Bank of America at $6? That is just insane. Interest rates continue to increase, so it's sort of like a double-edged sword with, not so much a double-edged sword, but, it sort of helps and hinders Bank of America at the same time. The banks get more money, but that means also includes less borrowing from the banks because people are not going to borrow money if interest rates are going up. And looking at this stock, I'm looking to start an entry position at $24 or lower. It's going to do it, guys. Again, my portfolio just peaked the $23,000 mark. Not much to say. It's a blue chip Robinhood portfolio that I'm just holding it out and building a cash position. I'm eyeing these companies that you guys can see here: Waste Management, Home Depot, and Bank of America. One of these companies I'm definitely looking forward to adding to the portfolio, and I'm probably going to try to get my portfolio back up to 10 stocks. That's going to do it for the video, guys. Thank you for watching, and I'll see you guys next time.